Hi, everyone. Welcome to your latest Carson's Take 5 with Ryan and Sonu. Sonu, we are going to title this one 5 Things to Look Forward to in the Fourth Quarter. We've made it to the fourth quarter, which means you've got some birthdays coming up, right?
Yes, in goodness, it's tomorrow. Today is October 9th. October 10th is my twins' birthday, and they are turning 8 tomorrow.
Okay.
So, and your family is full of October birthdays, too, including yours, by the way, right?
Yeah, I've got an anniversary. I've got a son's birthday. My other son had a birthday in September. My daughter's birthday is early November. My wife's birthday is early December. Then, of course, holiday season. So somewhere in there is my birthday, but that's okay. I'll fly under
No, it
the
has
radar.
significance too, because isn't it the most bullish day of the year or something?
Yeah, my birthday is October 28th, which historically is the most bullish day of the year. Random? Maybe not. I don't know, but sometimes it falls on a weekend. I have no idea when my birthday is this year, but I'll gladly take cards and presents October 28th. Thank you, everyone. All right, Sonu, so let's dive into it. This is called Take 5 for a reason. This week, we're going to talk about 5 things to look forward to in the fourth quarter. So let's just, before we go, let's do a high level third quarter. S&P gained over 5% in the third quarter. Normally, third quarter is not that strong. September, October usually aren't that great. We're in the middle of a 5-month win streak. So the third quarter kind of bucked the usual seasonal weakness. Now, we did have some big pullbacks at the start of August on the yen carry trade worries, start of September, and honestly, start of October. Whatever reason, the first couple of days of months lately have been volatile. Then we fight back. Anything you kind of want to touch on high level in the third quarter, then we'll talk about what we're looking for in the fourth?
I'm feeling what our first biggest thing to look forward to in the fourth quarter will be. So I'll lead us into that. The S&P 500 is up over 20% year to date as of the end of September.
Yeah.
I think something I read from a good friend of mine, this is Ryan, just so that everybody knows, is that this is the best first 9-month performance for the S&P 500 in an election year period since we've been tracking this stuff ever, right? And so, which means the market has a lot of momentum. And the good news, just tying it to the economy, is that, look, the tie between markets and economy is through profits, right? So when you think about market returns, people are like, oh, wait a minute, it's up 22%. It's the best ever in an election year. Is the market too stretched? And you think, wait a minute, most of that return has come on the back of profit growth, right? So when you're thinking about, is it too stretched? I would say no. And I think that's a good sign going forward.
Yeah. So again, we'll talk about the stock market, the economy, the election, the Fed, and bonds. So let's talk stock market first. It is the fourth quarter. Something to look forward to in the fourth quarter. The election's almost going to be over, but we'll get to that in the election. October is usually not all that great. Listen, it is what it is. We're up 5 months in a row, 10 of the last 11 months for the S&P 500. We talked about this last week, I know, but maybe you get a little volatility, but something to look forward to. Fourth quarter is usually really strong, right? Fourth quarter is higher over 80% of the time. When you're in an election year, fourth quarters usually do pretty well also. And so when you're higher 8 of the first 9 months, like we were this year, the fourth quarter has actually never been lower. So relatively small sample size, but when you're strong going into it, I think investors should be kind of looking forward to maybe more gains, maybe a little pre-election jitters, but more gains. Anything else on the stock market? Then we'll talk about 4 other things we're looking forward to in the fourth quarter.
I've said this so many times, but I'll say it again. Momentum begets momentum in the market. You want momentum. You want more 52-week highs. You want, things to broaden out. And I think that's one thing that's positive looking back over this year, and especially over the third quarter. We've seen that broadening out, right? Broadening out across. It's not
Good
just
point.
7 stocks doing well, right? You've seen small caps gain. You've seen mid caps gain. You've seen financials and industrials gain. So there is that broadening out, and we think that will play out into the future as well.
Again, as of the end of the third quarter, going into the fourth quarter, there's 11 S&P 500 sectors. They're all higher for the year. They're all up double digits, okay? Like energy was not doing very well. Energy has been really strong lately with what's happened in the Middle East and crude oil. The reality, though, is all groups are up double digits. Yes, some are up more than others. That's how this works, but it is a broad baseball market, something to look forward to in the fourth quarter. Want to talk about the economy next, or which one do you want to talk about next?
We'll start with the top line. I mean, again, looking back, we saw everyone as, there's so much of tension and calls for, like, are we in a recession? Will we go into a recession? I joked earlier this week, that we should maybe just stop saying the R word. Can we please do that? GDP, we got big revisions to GDP growth over the last several years. It's better than expected. In fact, it was already better than what, say, the Congressional Budget Office had predicted before the pandemic. And we had a pandemic, and real GDP growth has exceeded that. Gross domestic income is also revised up. And looking forward to Q4, I mean, we'll get, the Q3 GDP data, but we've been banging out 3% GDP growth numbers. And by the way, this is after adjusting for inflation. Quarter after quarter after quarter, it looks like that's going to be the same. Now, this is Q3, it's just that we'll get the data in Q4. But doesn't seem like there's any let up. The economy is growing on trend to maybe slightly above trend. That's good for profits. That's good for markets.
And that is something to look forward to in the fourth quarter. Again, we've had really strong productivity. We've talked about this before, but strong productivity is that magic elixir that allows for the economy to come in better than expected. And most economists continue to doubt this economy. Record profits, record or not record, but increasing profit margins. It's kind of a dual tailwind for equities and for really the stock market in general. Our stock's a little pricey. Yeah, parts of the market's pricey, but there are some parts that aren't. But again, we've said before, earnings are justifying this bull market. This economy, you could argue, is not slowing down. It's actually showing signs it wants to pick up here. That surprises a lot of people, but that's something to look forward to. Something else to look forward to. Let's talk about the Fed here. The Fed has started cutting interest rates. I know we talked about this maybe 2 weeks ago or so, but it's something to look forward to because the Fed is no longer a headwind by hiking, right? You want to talk about the Fed here?
Right. And I think there's always a fear when the Fed starts the cutting cycle, are we in trouble?
Yeah.
Right. And historically, that's proven to be the case because it's historically we've seen that the Fed is behind the curve. And we can talk about payrolls as well. Right. But, the latest payroll data say essentially took some of those recession fears, some of those labor market risks off the table. I don't think it's completely out of the woods yet. But look, the unemployment rate is at a historical low of around 4.1%. Yes, last year we were lower than that, but these are all relatively low levels of unemployment. Layoffs are really low as well. And at the same time, the Fed is cutting, right? And that's a tailwind for the economy. That's a tailwind for markets as well.
We've looked into it. If the Fed is cutting because you're going into a recession, then yes, equity markets usually don't do well. If we've said repeatedly for 2 years now, by the way, the bull market just turned 2. We've said there's no recession coming. So when you don't have a recession and the Fed's cutting, a year later, stocks have never been lower. When you look at the 20 times the Fed cut with the S&P 500 within 2% of an all-time high, like we just saw a couple weeks ago, a year later, S&P's higher 20 times of almost 14% on average. This is one thing to look at, but something that investors in general should be excited about in the fourth quarter and looking forward to is we have a Fed that is no longer kind of a headwind and more of a tailwind by cutting. Now, kind of part two to the Fed, let's talk about bonds a little bit. I mean, bonds have had a good year. Last couple of weeks, Sonu, we've seen yields. Remember, yields go up, bond prices go down, bonds have come back a little bit. But what can people look forward to in the fourth quarter from fixed income?
I mean, for now, you still get about 5% on your money markets, things like that. But the Fed did cut from 5.5% to 5%. So you can kind of expect that in your money markets, which is higher than what we got all of the last decade. Right. Even if they cut rates further, right, over the rest of this year, maybe they cut another 0.5 percentage points. That'll take rates down to 4.5%. That's still well above what we were, what we could get a decade ago, right? Or across the last decade, to be honest, 2010 through 2019. So things are normalized. Bond prices are also normalizing. Bond yields are normalizing. And bonds are also playing that traditional diversification role, I think, going forward. Like if the equity market goes down, in 2022, bonds did not diversify. Whereas going forward, I think bonds start to play that role a little bit more. Like if we do get a recession risk, I mean, I'm not saying we should have everything in bonds. Like what we do in our portfolios, we diversify across our diversifiers too. But it's comforting to know that, bond yields could go down as a result if recession risks rise, and they may zig when stocks zag.
Exactly. 22 is a good example. Stocks did terribly. Bonds did historically bad as well. But what do we see in early August? We saw a violent 8% pullback in the S&P 500 over worries about the economy, the yen carry trade, lots of stuff. We talked about it back then. Just know the stock market went down 8% pretty quickly. Bonds gained like 5%. All right. So they didn't give it all. You didn't get it all back, but that was a nice cushion to help you sleep at night. 2008, we all remember 2008, right? Stock market lost like 40%. Bonds are up double digits. Not saying they made up for the losses when it came through the stock market, but it was a nice, part of your portfolio to help you sleep at night. And we do think investors in the fourth quarter, should we hit some volatility, some roughness, bonds will probably start acting like bonds once again. Something to look forward to. So I don't know if we saved the best for last Or
Okay.
we just saved it for last, so we
Yeah.
don't want to talk about it. Something to look forward to is the election. Now, maybe to look forward to, it's over. But let's talk about the election for a minute or two here. Go ahead.
No, I think the election, it's a close election. Who knows what's, like it's a toss up basically, right?
Yeah.
But it's not just the presidential election that's going to matter. It's also the Senate, Senate control and how control of the House as well. And this matters especially because next year, the 2017 Tax Cut and Jobs Act expire. A lot of the provisions expire, especially on the individual side. So next year we're going to hear a lot about tax negotiations, right? So that's why what happens in Congress, both Senate and House, matters just as much as I think the presidency, the control of the White House, right? And usually, historically, I think the odds right now slightly favor mixed or split party control of Washington, D.C. next year. And that's not a bad situation for markets because that means you don't get a big policy swing in one direction, whichever direction it is.
Yeah, I mean, we have a divided Congress right now. When all is said and done here in a month or so, we probably still have a divided Congress. Maybe we have a little blue wave or a little red wave, but it's not going to be massive strength. What the market doesn't like is too much power one way or the other. It's like our forefathers wanted checks and balances. Again, to get anything through when you have a divided Congress like we do right now, 51-49 in the Senate for Democrats, and the Republicans have the smallest majority in the House, 140 years. To get anything through, you need both sides to agree. And that's actually pretty good because the last 13 years, we had a divided Congress. Sonu, the S&P 500 was higher. We knew that coming into this year. And sure enough, the S&P 500 is looking at 14 years in a row. So if we have a divided Congress, all said and done, that tends to be a positive for investors. But I think we'll just put a bow on it. We're looking forward to the fourth quarter, getting this election over with and just moving on with life. Of course, it matters. It's very, very important how things shake out. We're going to talk about, but those are some things to really focus on as we move forward. So with all of that, everyone, is a little bit longer than normal. Carson's Take 5. We had 5 things we wanted to talk about, 5 things we're looking forward to in the fourth quarter. We've made it to the fourth quarter, everyone. We're going to do it. We're going to get through this election. We're going to get there. So Sonu and I will be back every single week talking about it. And believe me, we're going to talk a lot more about the election in the coming weeks as well. So with that, everybody, Sonu, send us home.
All right. Looking forward to the fourth quarter. What can I say?
Yep. See you, everybody. Thank you. Goodbye.